Hello, YouTube. We're going to keep it brief today. It's Valentine's Day. Even us traders got to take care of the missus at home and do some romantic things, other than
Away
blood
from
red on the chart.
keyboard. Yeah. Hey, baby, I got you a sell-off today. Look.
Well, for me last week, it's like, hey, baby, we got some New York steaks, so this is to celebrate a short position that paid well on Disney.
I was eating red bean. I was eating red beans and rice with cornbread and collard greens, and you was eating steak. And I'm gonna tell you, mine tasted better.
I bet it did. I bet it did. That's some good food. For me, it
I'm
was
just using.
I made a deal with my wife that anything I make trading Disney would be spent either on family entertainment or also invested in that other company that I invest in, the the fan funded piece of Hollywood, so to speak, Legion M, and I've stuck to it.
Look at this. That's your. You got your spinner there. So
Yeah,
how about that? How about that? Look at that.
this is possible.
Panel,
Just a
trading range, breakout.
Hmm. Well,
I love it.
if you look at my 5 minute chart, you'll see that it just goes from one liquidity zone to the other and
I don't
bounces.
see your 5 minute chart. Where is it?
Let me get a screenshot of it. I'll put it on the.
Okay.
In fact, I'm going to do it from my phone because I can do that while I'm streaming. Whereas my Weeble chart is under your chart for my display onto YouTube here. But you'll see it just goes from one liquidity zone to the other. That's one thing I do love about Weeble is that the all the lines I draw on my desktop will appear on the mobile app.
Ah,
So that's pretty cool. Here's the phone version of that. There we go. So effectively, you can see that tweezer top on the 5 minute chart wicked right into that liquidity zone, and boom, rejection right down. Now we're just about to the bottom of that channel. So this is where you either get a
Wu Tang.
right, you either get a trend day or you get a channel or a range day. This is where the decision is made right around this time of day, typically. And 409 is a key pivot, by the way, too. So there's a Beach Boys song innuendo there somewhere.
yeah. It came right back down to that opening. Wicked right past the opening candle down there in the 5 minute chart,
Yeah.
right here. Uh, we had those zones that we drew on out before. This was a previous trading range, right? Channel had a little trading range. That was a trading range. And then 1, 2, 3, we got that. Then we came all the way back down because sometimes you can have that 100% retracement. It could go back up. It did break and fill that gap from overnight. I don't. You can't see it on that chart, but it filled that overnight gap.
Yeah.
And it's like a big double bottom right here. That's the double bottom y'all were talking about. See, it's like a big double bottom on the 1 minute. It's a double bottom on a lower low on the 15 minute chart right here too.
It's exactly where we'd
So,
expect it.
so sometimes you'll get a not just a 66% retracement or a 50% retracement. You'll get a 100% retracement or more. If the trend's powerful enough, it'll go back up if it's strong enough. And we do have these levels that it's hitting that are key levels for the last few days. This was a big nice turnover here. We saw that. You often see that when prices get ready to change, you follow the wicks. That's what I look for. Wicks. Start seeing them up there on the bottom. I look for them on the bottom when prices get into point of where it's been trending for a while or breaking out. It's going to come to an exhaustion point. And that's when you're like, if you're a bear, you want to get in when it starts that turn like up over there. Now I talked about waiting for, it to go past that moving average. And then while I was in a la land somewhere else, almost missed this whole move, but I wound up grabbing a good 4.5 points, I think it was, which made my day. So I'm happy now. I'm done. I don't have to trade anymore. I'm a slow trader. If I make a good trade, a good profit, I'm out. I'm done.
Made some cash, and you have a plan to keep it.
Exactly. And that's the important part. You got to have a plan to keep it. But, I really appreciate we have a new trader, or not a new trader, but certainly not a new trader, well-experienced trader, new to our group, who has been putting in some wisdom bombs, just dropping them right in the middle of everything in our Discord.
Oh, yeah.
You guys don't get to see that all the time, but that's what our members get to see. And just dropping some great wisdom bombs in there today. Picked up a couple of things that she brought to our attention. So nice. Good stuff, good price action, fun stuff.
That's why we love doing this.
Absolutely, man. It is groovy. I lost my train of thought. That's terrible. I was looking at too many things. That's why I have a hard time, trading. Y'all were talking, and I was like, oh, I'm gonna grab this one. We could continue to come down. Let's see what happens here.
Let that 1 minute close. See what happens. Yeah, it's right on that liquidity zone.
Back to some levels we were at yesterday on SPY, that 410.05-ish area. There it is, right here. Oh, yeah, I know what it was that she was saying that I was talking about. I was taking my time. I said I was done with my one trade. 6 months to hone a specific way to trade. 6 months.
Yeah, that's kind of discipline.
10,000 trades over 6 months to hone. And I don't think that was with real money. To hone that skill. Yeah. I keep reiterating to folks how long it takes to do this. I thought I could do this believe it or not, I thought I could do this in like 2 months. And I got blindsided by the reality that, no, you can't do this in 2 months, but you can do it. But it ain't going to happen in 2 months. But you can do it. You can do it well, but it ain't going to happen in 2 months. It's like going to the store, picking up a guitar, and then wanting to show up on stage, with Chris Stapleton somewhere, or somebody, name somebody, and just, you're not just going to walk up on stage after playing the instrument for a few weeks. Market makers are those rock stars.
It kind of harkens back to that karate movie analogy we love talking about. That practice that 1,000 kicks. Or practice that one kick 1,000 times.
Absolutely.
You will be fierce.
Fierce. Dude, look, you can be any kind of trader. You can be a trader who takes 3 trades a day and makes bank.
Mm-hmm.
And I'm going to use that term right now because we're all here for money. That's why we're here to learn how to make money. That is the bottom line of the trading community. So why lose bank all the freaking time because you're trying to jump into something, trading real money, and you're not ready for it?
Right. You just got to slow your roll.
Yeah, slow your roll, man. Keep that money. Keep that dinero. Keep that money, because what you can do with it, once you learn, you'll be like, I am so glad I kept that money. Because once you learn how to do this, you'll be like, over there with Jeremy, you're bouncing off the walls of price action, trading 16 things at once, and then having New York steaks with your family because you want to celebrate your Disney short.
I know. Yeah, it's.
But I'm serious.
Like that.
I'm not trying to be an old grumpy guy. I love y'all, man. I want y'all to learn how to do this stuff and do it well.
That's the thing. It's like when you get to a point where, and you'll come to this several times throughout your learning period, is you'll get to a point where you feel like I've got this, I can nail this every time. Don't become complacent.
No,
That's the biggest
I
killer. A
know.
lot of people they'll have a streak where they do really well and then suddenly market conditions change and they give it all back, or and then some. And then they keep beating themselves up about like, why isn't my strategy working? It worked so well in the beginning. What am I doing wrong? I must be applying my strategy wrong. No, market conditions changed and you became complacent. That was the issue.
Right.
So
That's right. Good word.
when you start to see that it becomes a question of why is this so easy? Stop. Start analyzing what's really going on in the market, because I can almost promise you when you have that question come to mind, that is where you're going to notice that there's going to be some change in market conditions.
That's why you have to learn how to follow and not so much track. I keep thinking about this. I'm Louisiana's trapper land. We had trapper wars down
Right.
in Plaquemines and St. Bernard Parish back in the last century, uh, like 1900, early 1900s. And a trapper lays a trap in a place that he believes or she believes that their prey, is going to come, going to walk in that direction.
Right.
So you have to think about price action the same way, as opposed to trying to be a hunter and track it and get all exhausted and everything. Just know where the price is going to be, and then you set your trap for it. And if it comes there and it hits it, you're ready for it. I'm not saying do limit orders or anything. I'm just saying think about it as a trapper instead of a tracker.
Right. And in a sense, I mean, you got to understand that there's a winning side and a losing side to every trade. So every
Always.
every trade where you make money, someone out there somewhere is losing money, right?
Yep.
So in the reality is, when you start questioning yourself and you choose not to be complacent, know that when you recognize that the market conditions are changing, you are actually taking advantage of the complacent. So you're exactly a trapper. That's a good way to
There
put
you
it.
go. That's a good way to put it. Yeah, because I mean, we've watched the market conditions change a bunch together here in the last year or so,
Oh man,
and
this has
uh,
been a
and it's
wild ride.
true. It's been a wild ride. Right when I started getting the single options, the whole thing just went wild, and then it went to 5 0 days.
Mhm.
That made the whole market cycle. It didn't make the cycle change. It made the tempo change.
Right,
Is what it did. Because you every day in every chart, doesn't matter where you go, you're still going to have the three things that price action traders are looking for: channels, uh, you know, breakouts, and trading ranges. You're going to have those all day long, every day. And if you can't see it on one time frame, you'll find it on another. It's going to be there.
right,
But the movement and the range and let's say the movement, the tempo, whether it's been sluggish, so it slows everything down a little bit. And if you're so used to trading really high fast and the momentum's been big and it's been like going nuts, it can screw you up, man. It's like all of a sudden your brakes just stop on your car and you go through the windshield if you're not wearing your seatbelt. You gotta be careful.
right.
And that's what it did. That's what it did to a lot of people, didn't it?
Oh yeah.
Jackson Hole,
Yep. Jackson Hole
a lot of
ripped a
people
lot
lost
of
money.
faces off.
And they lost money because they didn't have the strategies, and I know you have them, that can make money in any market.
That's
And
the
and the
thing.
way that
Just
you're able to protect your options and protect your profits is freaking amazing, dude.
that's the part that humbles me. Like I go and I can get these really outside of the box options positions that not many people would even think to trade.
Out the box.
For that matter, they're out in the weeds, so to speak, where like you would see a lot of people trading single options that way when they're just learning, or maybe they have a small account where they can't take a bigger risk on options closer to the money, so they tend to trade those options that we know are just going to be junk. They're going to expire worthless. But trading them on a range and then also finding a way to minimize your risk at the same time by, instead of trading single legs, you trade a spread. That's step one. Step two is if you're in a position that can suddenly become a point where it might expire at or in the money. That's pretty rare, but it does happen. And you got enough size on that position to where you take profit on a massive chunk of that and lock that profit in by taking that profit. You can still leave some skin on the game by converting that into a different type of position, where you can take a debit spread and convert it into a butterfly by sharing the same short leg and then purchasing another leg equal strike out from your first long leg. So you essentially have captured price at that point. If the market, if those expire on the same day where the market is trading at the short side of that, you stand a potential to earn almost the entire width of that spread. So if it's a $5 wide, you've got a good chance of earning almost $5. And if your risk was low enough during the conversion, you capture that profit anyway. You've captured a large portion of the profit and left some skin in the game on for an even bigger win. So you're not being greedy in that respect because you've already taken profit out of the market. No matter what happens, that position can't lose. Being able to do that is an incredible epiphany point of your trading career.
Sorry, I wasn't paying attention.
I was going to say, are you going to write a book on that, Jeremy?
Yeah, he needs to.
I am.
That's what we're trying to do. He's working on it right now, and that's why I'm sitting here messing with him, and I'm loving it. I'm loving every bit of it.
Yeah, let's go.
I'm writing a book. I'm writing it. It won't be the longest book. It'll have like maybe 4 chapters in it, but it's going to start with price action and lead to these crazy options positions that I've been trading.
He just gave us the section on spreads. That's what he just did right now. He just gave us a brief description of his draft on spreads. I'm sitting here loving it. I'm glad that was on YouTube.
Here asking, I'm wondering, okay, can you put that in literature and get that to us? Okay.
Oh yeah,
and give us some examples of what we're looking for here.
Absolutely. Hey guys, I do have to dip. It is past my time to dip.
Sure, sir.
Jeremy, can you take over the stream?
oh absolutely.
Hey guys, have a happy Valentine's Day, and I will see y'all.
So
You as well, sir.
You too, man.
happy Valentine's Day. I'm gonna cut out, but I wanted you to listen to what happened today. So I almost got liquidated twice and finished with my account up $27.
Not bad, not bad.
You
Yes,
reported earlier?
I came back up after being almost liquidated and then jumped back in on that first double bottom. That was about 20 minutes ago. Almost got liquidated again, but figured it was forming a double bottom on the 2 and then hopefully that Wu-Tang, and it did. And I measured out the measured move on the double bottom on the 2, put up my limit order, and it hit it, and I'm done. And I didn't get liquidated, but almost got liquidated twice, so I need to fix that. But
Just gotta fix your risk point and when to take positions a little bit for timing, but you're doing good. And the decision to be able to make is critical. Of I want to keep this. I don't want to give any back. So it's a matter of slowing your roll at that point. Be like, I can keep this. If there's another premium setup that I can trade very efficiently, I'll take it. But if it doesn't come, I don't have to be in a position. I can just sit.
the thing is, too, is if I had a bigger account, so like giant red candles like that, you know it's coming back up. But
Right.
if you have a small $100 account, you get in at the wrong time, you're done. But if you have a $1,000 account and you're doing single contracts, who the hell cares? You can wait a little while, and as soon as you see it reverse, you jump right in.
Yes, sir. That's exactly it. And when you get to that point after you've made a bunch of base hits and you build that account size, your discipline can change a little bit, but you still got to maintain that ability to know that you don't want to give anything back. So if you made some profit on the opening range, awesome, but wait for a premium setup before you go and take a later position like this time of day, particularly because that volatility is going to fade.
Yeah. So I made 21 yesterday and 34 today. So
There you go, man. And like I said, you make those every day for a few weeks, and that account takes care of itself. And eventually, you've got some size where you can start scaling.
yeah, I mean it's paper right now, but I don't know. And then it gets frustrated too because, like Stone was saying, you only need to master a few small things, but then you hear about Rule One Investor doing Dom and all this stuff, and how long she took, and all this. And now she's amazing, and you just like it kind of discourages you a little bit.
It does, but you gotta take it a different way. So we show you guys many different ways to analyze price action. Between Stone and I, we've probably got like 25 different approaches to price action, and the reason being is that it's no set of a particular analysis tactics are going to work the same for everybody. So it's up to you to make a choice of a few pieces of that variety that put it together and make it work for you. And when it comes to other traders who are killing it with their strategy, that strategy might not work for everybody as well. Just think of it the same way. So like, she can kill it on a Dom. I can kill it on a Dom in a different way, but it's not the same. And there's probably others who can kill it on a Dom and do well, but it's going to be different for them as well. So what it really comes down to is don't be discouraged by it, but just know that that's something that works for somebody, and you can take pieces of that with you if it works for you later. You're going to be constantly evolving your strategy of analysis until you get something that just works for you. And that's the important part. Once you build that strategy out of several other strategies, it will start to make sense. The fun part is when you take and you learn all that stuff and then you start to show others how to do it. When you've done it really well and you've mastered it and you start to show others, you start to learn new things and your strategy actually changes. And Stone's a prime example of that. He had a great strategy, worked for him. He evolved it into an even better strategy when he started teaching. And that was kind of the selling point to get him talked into taking that position of moderating for us anyway. As I like, dude, try this, learn how to teach it, and then it will make you a better trader inherently. And it sure as heck has. So it's something to live by, is to be able to analyze a bunch of different stuff and then find what works for you. It's not like don't get focused on one strategy, but evolve it.
Yeah, I think that's what's really encouraging about it is there's so many, what you're noticing is that there's so many other options to do this. And I'm a new trader, and to see the possibilities or learn about the possibilities of different strategies that can be implemented, it's kind of encouraging to me.
Absolutely. And it's just being able to take that approach of looking at it, to not be discouraged, but just to maybe use it as a little bit of a sense of drive to learn something that works for you, instead
Absolutely.
of making it feel like these other people are making it look easy and here I am having a real hard time with it. That mentality has got to be changed. You can't keep going in that route. And you're starting to pick it up, but I think you're starting to get some things that work for you, and you're making it work. And then it's just a matter of assessing your risk, slowing your roll, and taking advantage of knowing when to keep your money.
Well said. Thank you, sir. I'm going
Yeah.
to leave you guys as well. Okay. So
Yeah.
happy Valentine's to everyone, and take care.
Same to you. You too.
Not everybody, but I think people do a bad job of not you, just not talking about their losses.
Right.
People need to talk about their losses because you have a lot of people like me who are just consistently not doing well. And they don't want to hear about how, oh, it's just this easy. They want to hear people lost a lot, did horrible, then came back. You have certain people that come on here like, oh, I just did this and it worked and it's perfect and I'm great now.
Right.
And it's not realistic. It's totally not.
It's hard to be on the other side of that too, being the person like I don't want to look like an idiot, but you got to humble yourself and be willing to own your mistakes. My P&L doesn't go straight up; it has some downs, and it pulls back. It looks a lot like a stock chart, but I still have overall it's running that bullish trend, but it took me a while to get there to where it can be at this volume.
Yeah, but like how I did predict that Wu Tang, and it was looking like it might go right back up to 415.5 that liquidity box on the 5-minute futures.
Yeah, it's looking like it, but let's
Good pause here though. I'm not jumping back in. I'm done for the day after that.
well, this is where I was going to draw one of those unorthodox trend lines right here. And just know that there is a midpoint, and you can see it blended right through the chart if you just look at it, but it's right through there.
I'm not on YouTube, so
Oh shoot, I gotta put that in there. Thanks for reminding me.
you got a killer double bottom on the 10 on the 15.
What in the heck? Oh, hang on. I just mirrored it. That was dumb. There we go. So I'm going to draw it backwards actually, but it goes right through here. And you can see where prices reacted to it twice already. Adjust it. So here's the point where you came out of your Wu-Tang, ran up to targets. All those targets can easily be found in the previous trend, right? You got all these bars in here. So there's our R1, there's our bar breaking it. Bar went and wicked to the top. If you line up my crosshair there, you can see the wick on this big green bar here went right to the top of this candle here. The next target was nailed as well with a wick, so it was starting to reject there. And then you go into the extension, which is this guy here. That wick right there lines right up with it. There's your breakover and a pullback, but there's your trend line. So it came right back to that angular, tested it, bounced out. But it also, and there's
Where'd you start that trend line? Sorry.
this trend line right here.
Yeah, where's that one from?
So I drew it backwards. And when I found this in between here, and then I saw this deviation here and this accumulation here, I just lined it up with that and then ran it all the way back. And it lines up with some pre-market stuff too. This is what Stone and I have come to know as the retro line because we drew it backwards. It doesn't set anything in stone. It just gives you a point where price is likely to react.
If it breaks through that ascending one with confidence, it's going to 412.
Exactly. You got it. And that's an old trend line there, and that one comes from where
You know what I've noticed? Like instead of trend lines on the futures, that 8 to 20 and the 200, they
Yes.
work pretty well for trend lines.
Oh yes,
As far as support and resistance. Like if
absolutely.
you see it go through one of them, it's going to hit it and then keep going.
Yeah, that 8 period and 20 are like my go-to for futures, man. You can see every time it crosses, it runs its course and does exactly what it's supposed to do.
The 200 works really well too.
Yes, it's like a gravity line or a big moving pivot. Yeah, and the 8 and the 20 confluence gives you exactly when the trend changes. It's just incredible how efficient that can be.
So the 200 is like right through the middle of the Wu-Tang or near the neckline on the Wu-Tang and the 5.
Right.
I mean, 2 and the 5. I really think it's going back up to 415 today.
I don't doubt it. And that's where we got the liquidity zones. We got one up here, one down here. Even in the pre-market, this box was drawn long ago. I've been using the same box for a long time, right? 416.58. It wicked right to the top of that zone, dude. I mean, to the damn penny. So it's like you look at that back on a 2-hour chart. This is the candle I drew that off of right here. Boop. It stretches
There's
to the right.
so many buyers up there caught right now.
Yeah. There's a bunch of bag holders right in that zone, and that's exactly it.
It's going to be hard for it to get through if there's that many bag holders.
The thing is, once it starts to chew, sometimes you'll get some bodies that go through there. So like if you watch these liquidity zones and how they trade through different days, at some point, like over here, for example, you'll see there was some bag holders in this mess, right? The day before it accumulated, went right to it, waked off of it. Eventually in the after hours, well, pre-market, there was some bars that started trending through it. It always goes out of there, comes back in, tests it, and then bounces out. Tesla did exactly this, and that's where I saw the zone to buy. And I went long on Tesla like no other and made killings on that. But same setup, just different time frame.
Because you knew when it came back in, it was going to go back out.
Right. It came over the top of it, came back down, tested it, went right to the bottom of it, bounced out, and I was just like, okay,
Well, it
I'm gonna
went
start
from
loading the boat.
support from liquidity to resistance. I mean,
Exactly.
from resistance to support.
So like when we see these liquidity zones, we mark them out, and we can mark them out on every time frame too. So like we could literally take this 15-minute candle's wick right here and mark it as a temporary liquidity zone for the price action that's happening right now. Or we could do it on a 5-minute chart as well. That is a liquidity zone. There are some people trapped there. And what happens is when price starts to chew through it, you'll almost always get a breakout to the next zone.
I'm sorry, I got to run, Jeremy. I'm running late.
Quite all right, man. I know you've been hanging out a little bit longer. Don't be late for work. Go get them bad guys. I'm about ready to sign off the YouTube channel. If you guys have a quick question or something, feel free to chat us. If not, we'll catch you tomorrow. I know today's a holiday. A lot of people are going to be focusing on romance. I know I will be. I got a 18-year anniversary coming up this weekend, so lots of romance in this house. Looking at price action, it's kind of telling us that this is likely to sit here in this range for the most part of the day. And I'm talking about up here to 415 and down here to 409. Very typical. We know where the liquidity is. If at any point you see accumulation and a break through that range, just know that it's likely to make a quick measured move out of it. And typically when it chooses, the other part of the equation is it'll make an equal move up over the top. If you compare that to the 15-minute chart I was just showing you where it chewed through, this is what I'm talking about. It came back into that and built a measured move out of the top of that, about the same height, although it exceeded it right here, right? So this would have been a very quick scalp from bottom to top of that bar. So this wouldn't look like this on a 15-minute chart. This would look like a pullback. That would have been a great little ES scalp. And then you can run with the momentum later. But just know that anytime you go through a liquidity zone, they typically will make a measured move out of it that's equivalent to the width of that liquidity zone very reliably. So if you want to make a quick scalp out of it, you usually get a good opportunity there. And also, if it continues to make momentum outside of that, you know that it's likely to continue climbing to the next liquidity zone. So then you start looking for them. You also pay attention to retracement points, and you just throw a pivot line on there. And sure enough, we saw that day we had a break through that pivot, ran to the next key pivot, pulled back, went exactly back to that 50% retracement pivot right here, this white line here, and then continued on up through into the close, settled right around that upper pivot. Now, when we saw the pre-market open up right on top of that thing, it was pretty clean that it was likely to make a trend up to the upper range or the upper liquidity zone, and sure enough, to the damn penny. And this was drawn on this candle right here, all the way back here. Just knowing where the bag holders are, it's just like that. When we were talking earlier about being a trapper, you go and you figure out where complacency is going to happen. Where are these bag holders going to be? Where is their easiest path to catch them on? That's where your trades are. Yeah, dude, I've scalped penny stocks a lot. That's where I learned a lot of this price action, and I call it learning the hard way because penny stocks are a challenge. And when you start getting really good at scalping penny stocks on price action, all the rest of the price action on the large caps and ETFs becomes second nature. It becomes much, much more easy. So I call it the hard way because it does set you up for being able to make better analysis of large cap and ETF trading on price action. It really does. All right, give me 1 second. I need to flip windows so I can pop that back in. Bam, there we go. It almost crashed my Discord doing that. That was funny. I noticed it starting to tick up my memory performance. I'm like, I better pull this back. Get back on Discord. There we go. Sorry about that, guys. I didn't mean to dump you off there. It was starting to munch on my memory. When I start seeing things lag, I kind of look around for, well, what process is gobbling up the most memory? And I gotta fix that. So, let me see here. Bag holding PMCB. Ooh. That's not fun. I heard about that one. I didn't look at it, but I heard about it. Let's see if I can pull it up on this. I mean, a lot of people saw this as one big bull flag, and that's where complacency took place. That is some ticky-tacky chart, though, man. It's barely enough volume to make the price move, and it's been flat for forever. If it doesn't short squeeze, you'll probably have a chance of getting back out, depending on where your bags are. But just know that a bunch of us traders know exactly where all the bag holders are, so yeah, you can literally draw a box around this big old wick right here and know that they're all the way up to 333. If price can break $3, maybe it's got a shot, but man, if that, I would never even have chased that. I would have scalped it maybe, but that is a tough one to trade. That's some sketchy price action. Like, you can barely see what's valid on that thing if you switch it to HA candles. You can kind of see where the trends are. And right now it's open bearish, and look for support around 288. Hope you're not holding too heavy bags of that, because that's going to be a long time sitting before that thing spikes back up, if it ever short squeezes. I don't think there's enough interest in it to be short squeeze material, but that is a tough one to trade. One way or another, though, if you start finding stuff like this and you start being able to trade it successfully and not getting stuck with the other bag holders, that's when your price action trading is really going to come home. I just wouldn't take any size in a penny stock practicing like that. So let me get to Tesla real quick. And you can see my Tesla move. I mean, that was just methodical break of that descending wedge. Big old gap on earnings. That thing's just a money bag, man. But no, eventually they'll see a pullback, and it hit that $200 bill, and there were a lot of bag holders that chased it right up to that $200 level, 205, 207, I think it was. Now we're starting to eke our way back to it, so things are starting to make sense. I've got a couple of March 17th spreads on just in case, but they're way out of the money. If it hits 300, I'll be dancing, and I'll be rotating half of it into a butterfly just like before, but it's not a sizable enough position with enough risk to really worry about. Stupid cheap. Yeah. So I would tend to practice price action on penny stocks with a lot more volume than that particular one. That thing was just, my gosh, that thing was destined to be a weird mover and trap a lot of people, unfortunately. All right, let me check my status on a couple things here. Tesla will stay the course. Let's go for AMD. That's a pretty unique pennant right there on AMD. Last attempt at angular resistance here, and if it breaks, we've got a good chance of shooting above 88 bucks on AMD, but let me get rid of that layer real quick. So when I look at something like AMD, we look at very similar to what we saw in today's price action on the 1 minute chart. We had 1, 2, 3 legs of bullish movement and an extension right to that liquidity zone, and then it pulled back, right? Well, it broke over and hit support from basically its bottom of the opening. Well, look at the AMD on the daily chart. 1, 2, 3. There was a pullback here to the nearest pivot, $80.50 roughly. And then it bounced, but it's got to get out of this angular resistance if it's going to continue to move to the upper pivot levels. Knowing what's left is kind of key in that. And this channel here has a 50% retracement right at about $100. If it's going to continue this trend, it's got to break these pivots and finish that move. This is about the halfway point of the expected move out of this descending channel. So just like any other price action you trade, very similar for a swing trade. This is a daily chart. So anytime you start realizing that you've learned price action on really short-term charts and it looks the same as you see on long-term charts, you can become a very multifaceted trader. I tend to trade a lot of options positions on this sort of stuff. And then I can also go right down to the 5-second chart and scalp these little moves too. So once you get good at price action, everything just sort of makes sense. Anyway, getting a little long in the tooth on our YouTube feed. I'm going to go ahead and probably break it off here. I got to get on a call for the back end, trying to get our ability to archive our full streams on our website working, and that's going to take some work. So I'm going to get on a call and handle that, see if we can make some progress. I'd like to be able to get that working by next week, so we can have archives for all of our members. Thanks for joining us out there on YouTube, and hopefully you guys do very well and take some stuff out of our feeds every day. We drop a lot of knowledge. And just feel free to have it, because we eventually, one day, we want to be able to do this for free for everybody. So we'll get there. For now, we just got to keep the lights on and keep growing. That's our main purpose right now, is to grow so big that we don't need to worry about keeping the lights on. They'll just keep themselves on. We'll take care of the work, and the work will eventually take care of us. That's what we like to think. Anyway, I will let you guys go. Have a great one on YouTube, and I'm going to take a quick break from our Discord server. I'll leave a screen up, just that I'm going to kind of be in the background here. And again, thanks for joining us on YouTube. Like and subscribe. It really helps the channel. It's not our primary focus for growth. The channel is to bring a piece of what we do out to the public, so we can show you guys what we do. All that we would really ask is if you like it and you've taken some great knowledge from it, tell your friends. That's all. Just talk about us. Thanks again, guys. We'll see you around.